Mark, what jumps out to you as some little things to scoop up here?
Well, I'm going to stick with highest quality kind of recovery-oriented names. We tech investors and growth equities investors have still got to deal with this rising interest rate environment, aggressively rising interest rate environment. We're not thinking about that today, but we will be in the next couple of weeks and probably for the next couple of months. And so with that as the backdrop, we want to stick with the highest quality names. You mentioned earlier on, the Microsoft, Apple. In the space I look at, consumer internet, that's Google and Amazon, highest quality names. And are they for sale prices? Pretty darn close to it. They're both trading very close to trough multiples that we've seen for the last couple of years. I started off with those. I still like recovery names. They're a little bit more speculative, though, but names like Uber and Lyft. And then there's what I call Venn diagram names that have got high quality balance sheets and P&L, profit and loss statements, and have traded reasonable valuations and are recovery names. And those are the travel names. So names like Booking and Expedia. So that's how I start to wade in. But I want to start off with the highest quality names, Amazon, Google.
Curious about Uber and Lyft. I was at a conference earlier this week. I took several Ubers. Their pricing has gone way up, which is probably why they're coming closer to a profitability point if they haven't gotten there already. But I wonder what is going to happen as the Uber and Lyft drivers and that universe reacts to $5 a gallon oil, $5 a gallon gas.
Yeah, no, you're right. I talked with both of these companies. They both talked about this earlier this week. The hedge, if you will, in Uber and Lyft's business models is that, you got to commute one way or another. If you're going to be driving, you're going to be dealing with that $5 a gallon gas. So there's rising costs across the competing alternative solutions for ride sharing. Except for taxis, but I bet you taxi prices go up too. So they do have a little bit of a hedge there. There are ways in which, and there's a lot of flexibility, by the way, in this, as you know, in the Uber and Lyft pricing models. Those prices can move a lot so that drivers can still get reasonable per hour income. And I think riders are willing to pay a little bit more. And they've shown that during the COVID crisis. I think they're still showing that.
Mark, it's always good to see you, sir.